You see the man on the screen right here? You might as well call him Daddy, because Daddy can either break the current rally that we're in or extend it. Jerome Powell and the Fed have a massive decision coming up on whether they should raise the rate by 25 or 50 basis points. I got a few market reports that just came out, which is going to give us further insight on if he's going to lean to the 25 or lean to the 50-point hit. What's up, everyone, and how are you doing this Wednesday? Bitcoin sitting in the green at 21,422. ETH almost at 1,600. Remember, what's good for ETH and Bitcoin is good for the rest of the market as they bring them on up. XRP, one of the favorites of the show, is sitting at 39.3, up 1% last 24 hours. And XLM under 9 cents, sitting at 8.8 with a lot of bullish news coming out from Davos. All right, there he is. Like I said, you better call him Daddy, because the entire crypto market is hanging in the balance, waiting for Jerome Powell and the Fed. But we've had several news things break here recently that I have to share with you that might give us further insight on what JP and the Fed might do. Investors are locking in expectations that the Fed will downshift its interest rate hike in February. Easing inflation is fueling a bullish view on the 25 basis point move, but shelter prices may still look sticky to policymakers. That's right, everyone. Home prices aren't going down the way people thought, and that would be one of the biggest factors that the Fed could use in order to jack rates up. Now, we just had a really positive CPI data come out. Well, I guess positive if you consider 6.5 positive, but positive compared to what we've been dealing with as of recent history. Let me share with you some other economic indicators that have just been released that are going to give us more insight on what the Fed can do. Economists see a 70% chance of U.S. recession in 2023, survey shows. All right, so if there's a recession looming out there in the near-term future, the Fed wouldn't have to raise rates as much. Why? Because the recession means that people aren't going to be spending as much naturally. And remember, that's what the Fed is trying to do. They're trying to jack up rates to mess up the whole supply and demand thing, because we know supply chains aren't getting better, and we know companies aren't curbing costs, and they're just passing it on to the consumers. So if you mess up the demand side of the equation by jacking up how expensive things are by raising the rates, right? Home loans, auto loans, home equity lines of credit, credit cards, business loans, all that stuff make it more expensive. People will want to spend less, right? Curbing demand. But if there's a recession looming in the back end of 2023, well, maybe Jerome Powell and the Fed don't have to go with the 50 basis point hit and go with the 25. What about this? Retail sales, everyone. This broke today, and that's why you hit the subscribe button for the freshest news that affects the crypto Web3 market. U.S. retail sales month over month. The latest release, January 18, 2023, the actual was negative 1.1. Forecast was 0.8, and previous month was 1.0. That is great news, because again, this goes with that whole supply and demand thing. So if retail sales are down, the consumers aren't spending as much money. Again, so does Jerome Powell and the Fed have to go with the 50 or the 25? What about UK inflation? That's right, for my friends across the pond, I got your back as well. And wait till you see the stats on UK inflation versus US. Really shocking here to see. UK inflation rate dips for the second straight month to hit 10.5. Inflation rates have spiked across 2022, fueled by surges in energy prices as Western sanctions bite into access into Russian oil and gas supplies. Policymakers have been combating rising inflation with a spate of interest rate increases. See, it's not just the US, everyone. This is what the whole global markets are doing, with cues from the Fed, with British Premier Rishi Sunak on January 4th pledging to halve UK inflation to ease the cost of living and give people financial security. Now, let's look at two charts here. Here's the UK inflation chart. Peak UK inflation was sitting at October of 2022 at 11.1. Now let's compare that to United States. Now don't compare the numbers, because that's not an apples to apples thing, but compare the time frame. Peak US inflation was in of June of 2022. So the UK is quite a few months behind us on their inflation. Now here's the thing about that. Look at how little inflation has gone down for the UK comparatively, all right? From that spike of 11.1 to 10.5. When you look at the United States, though, we were at that, 9.1? Let's go to the 1 year real quick. Yep, 9.1, and we're now down to 6.5. So the US has seen a more effective, aggressive easing of inflation action. So again, this goes back to the whole point. Jerome Powell, 25 or 50 basis point hit. And none of you watching right now can deny the fact that inflation and what the Fed does is the biggest thing right now affecting prices of crypto. The last CPI data came out, propelled crypto even further, as almost, a couple thousand of you saw in the live stream that we did. And don't worry, we're going to be live streaming the next rate hike coming from Jerome Powell and the Fed, which is going to be February 1st. So again, hit the subscribe button so you don't miss out, because you know I won't. But I want to talk to you, though, about inflation and the 25 and 50 basis point hit. If a 50 basis point hit comes, it's going to stall the current rally that we're in. If we see a 25, which is what you're seeing priced right now in the market, that could keep things going sideways or kind of going up a little bit here. The problem is this. UK inflation is still really, really high, and it's not coming down as fast as the United States. Housing prices in the United States aren't coming down as fast as people would like, as well as energy prices, all right? Those two big things right there, the Fed is thinking, whoa, everything else is looking good? Well, except for food. Food sucks too, let's be real here. Food has not gone down nearly as much at all. But the two things of energy and housing, the Fed is really concerned with right now, because that's the biggest dollar hitter of the U.S. economy and of people's, honest monthly budgets, right? So the problem is, if we aren't seeing homes come down as well as fuel come down, the Fed then is more likely to lean to a 50 basis point hit. But with recession fears looming right here, right in the near-term future for us in 2023, maybe the Fed is sitting there going, hey, can we hold off? Can we let the natural recession fears take care of that supply and demand metric? What I can tell you about the Fed is this. They've always been behind on things, and they've always overreacted towards things. Now, I'm not putting a prediction out there as of yet because, like I said, retail sales have looked good. UK's inflation going down for the second month in a row is a good thing. But like I said, homes and fuel prices are just way too much, all right? That being said, I'm still leaning more to that 50 basis point hit. And I'm not being bearish on the market. I'm just thinking, hey, we do need to get home prices more under control, and we definitely need to get energy prices under control as well. And by the Fed jacking those rates up, that should help out those quite a bit. So let me know in the comments down below if Jerome Powell and the Fed are going to come out with a 25 or 50 basis point hit on the crypto market. Thank you very much for watching this video and the various levels of support. Comments, likes, subscribes, they're all welcome by me, and I'm greatly appreciative of them. And super thank you out there to the channel members. Until more news breaks, I'm going to chill out and leave you with this video right here. More deep dive crypto Web3 action that matters to you. You cool cats, have a great rest of your day.